afternoon. You're tuned into Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi. And for the day, it seems like that Nifty has found its home just around that 18,700 mark. It's not moving a whole lot. It's been just gyrating around that 18,700 mark for the day. But if you look at the weekly move, it looks like Nifty is on track to snap the 4-week gaining streak. And for now, we are tracking losses of 0.7% on the Nifty. And that's how we are likely to end the week. Surprisingly enough, despite the weakness coming in from Accenture numbers, IT has been resilient so far this week. And if you look at the week-to-date movement of the Nifty IT pack, we're likely to end with a bit of a gain. So that's something we are watching out for. For the day today, banks has been very, very volatile. It's been just between moving that red and green in the last few minutes as well. It's IndusInd Bank which is actually managing to hold down quite a bit. We have an exclusive story there with respect to Hindujas increasing their stake. So that stock is up around 3.5%. And broader markets underperformance, that's also quite interesting today. Second day on a trot that we are seeing that the broader markets are underperforming. The advanced decline ratio is skewed towards the declines. Pharma, that's holding out today in the green. So whether it's Aurobindo Pharma, Natco Pharma, or even Dr. Reddy's for that matter of fact, all of those stocks are higher, Aisha.
Well, yeah, they are. In fact, you just talked about IndusInd Bank. We will, of course, be revisiting that story. But take a look at how that stock has been panning out. We understand from our exclusive sources that Hindujas may soon be getting the RBI nod to increase their stake from the current 15% to now 26%, and they're likely to invest a sizable almost 10,000 crore rupees to raise a stake. In fact, we should get in this soundbite as well at this point in time. Yes, Ankur highlighting what he's picking up from his sources.
Yes, sources say that Hindujas are likely to get final approval from Reserve Bank of India for increasing stake in IndusInd Bank from current 15% to 26%. What we have gathered through sources is that the process of complying with the norms of Reserve Bank of India was on, and in that Reserve Bank of India had already given in principle approval to the bank for increasing the stake to promoters. And in that process, there is a form called R1 which was applied by the lender, and all the formalities which are needed for applying for increasing the stake are completed, and we have been told that now regulator may give the final approval for increasing the stake very soon. We understand that the promoters are likely to infuse around rupees 10,000 crore capital for the same, and it is likely to be done by IndusInd International and other companies. Now, as far as the process completion is concerned, we understand the whole process takes 60 to 90 days, and since the application was already made 2 to 3 months back, the final approval may happen soon. And as far as the timeline for transaction is concerned, we understand that in Q2 of current financial year, this transaction may take place subject to approval from Reserve Bank of India.
Right. Okay. That's all the buzz around IndusInd Bank and what we're picking up from our exclusive sources. By the way, UBS has downgraded Voltas now to neutral. They've revised the target price also to 840, and they're saying the aggressive pricing is going to be a challenge now for the return. So that's one stock in focus. Continues to be a block deal day once again. Landmark, we've seen 12.5% equity change hands there, and TPG Capital most likely is the seller. We will get to know the details later on in the day. UPL, they've approved the transfer of specialty chemical business in a slump sale basis, and it's going to transpire in the due course of about next 3 to 4 months. So that's another stock. UPL will just come up for you on your screens next. Landmark Cars, of course, after that stake sale, holding up 8.6% as we speak.
Okay, so those were some of the stocks which were in news today, but let's move on and talk about some of the other buzzers as well in the trading session. In terms of the price volume buzzers, we wanted to flag out what's happening with Adani Enterprises. That stock has seen a breakdown from horizontal support zone. It slipped below the 100-day moving average, so we are watching out for Adani Enterprises at this point of time. Ambuja Cement is also in focus because it snapped the 4-week gaining streak. It's formed a higher high and lower low for 6 sessions. So we're watching out for Ambuja as well on account of that. In fact, the entire cement pack, whether it's Ultratech, India Cements, Shree Cement, they're all in the back foot today. I think JP Morgan had written a note this morning talking about how they are cautious about the entire sector having a rub-off impact. Aurobindo Pharma though, that one is holding up comfortably in the green. It's hit a 52-week high level, forming a bullish engulfing candlestick pattern. And that's exactly my first question to Naresh Mirani, who's joining us with respect to the technicals of the market. Naresh, Aurobindo Pharma, Dr. Reddy, Natco Pharma, they're all buzzing in the trading session. Is there any name that you like?
So I would go with Natco Pharma because that's a stock which has made a strong base. So the stock corrected from 1150 levels, which was the top back in 2017 as well as in 2021, and came down all the way down to 550, 500. Say this was the price where it was in July to March 2020. After that, started making a recovery. Last say 2 months, it has made a range bound move from 620 to 655, 660. Today, it has given a breakout over that 655, 660 mark. This gives us a target price of 750 to 800 in the short to medium term. So looks promising. And then comes Dr. Reddy, which has made a total recovery. So the stock had given a breakout of 4,500, went to 4,950, 5,000, saw that big gap down, and now we are back above those 5,000 levels. So that could also be interesting, just that the risk reward may not be as great. So I would go with Natco Pharma and then maybe Dr. Reddy's.
Right. Okay, that's the word coming in on which way the market is headed. But Naresh, just wanted to understand, considering the market has been so volatile, still so narrow a band all through this week, any definitive trends that you see emerging?
So not really. If we look at the index, we are still in that band of 18,600 to 18,900. We are seeing some heavyweight pull up, say something like a HDFC Bank and HDFC Limited has started pulling up. We are seeing a breakout in Bharti Airtel, but at the same time, we are looking at Reliance Industries not being able to sustain above the 2550 mark. So you have one heavyweight going up, one heavyweight going down, and we are still stuck in this range. And this range could continue. And there has been a little bit of a cool down in the broader markets, which had already run up quite a bit. So looks like we have some more time before we go and make a new all-time high. But till the time we are about 18,600, the bias will remain positive.
Okay, let's welcome on board Meghna as well. Meghna, hi, afternoon. Good to have you on the show. I think this week was one of those ones which really sort of tested our patience, almost got close to a life high and then receded from there. But, the index aside, any trades or any trends that you're picking up?
Hi, a very good afternoon. Thank you so much for having me over. Yes, of course, we've been moving in a consolidation range, very close to the highs, like almost there, but not yet there yet. So I think the wiser thing to do is, of course, sector specific, stock specific. You can see good trends and good opportunities to go long. However, having said that, indices, I think they are more of a sideways. I would rather wait for a trend to emerge out of this sideways consolidation move to really decide my course of action.
Get that. Pertinent as it may be. Pharmaceuticals, I guess that's the only one trend today. And then, of course, there is IndusInd Bank as well, which is holding out in trade. There's Auto Pharma, which is scaling higher by about 3.5%. There's Dr. Reddy's higher by 2.25%. These I can spot as the only standout winners in an otherwise okay sector, because aside of that, most sectors are still very much under pressure. So even a Glenmark, Zydus Life, these are some spots of green in an otherwise weak market. A Granules, as I can see it. There's Alchem, there's Torrent Pharma and Abbott India as well, which are actually holding out. Naresh, anything that you would be tempted to trade within the pharma sector?
So it would be selective more so on the mid cap and the small cap side. So we are looking at a clean breakout in Natco Pharma right now. So that's one which comes up. There is a small name like Ajanta Pharma, which is coming back to new 52-week all-time high. So that looks interesting on the dip. And then Dr. Reddy seems to be a leader in terms of the fast recovery it has done. So it fell from 4950 odd levels back to 4400 and has made a quick recovery above those levels. So that could take leadership and go towards 5500 to 5600 also. So I would go with Dr. Reddy's on dips and then maybe look at smaller mid-cap pharma names.
Mid-cap pharma names that you like at this point of time. But Meghna, what's your take regarding these banking names? Very, very sporadic moves happening today. Of course, IndusInd Bank is reacting to news flow. But HDFC has been very flat. ICICI on the back foot, Kotak too. What's your take on Bank Nifty and its constituents?
I think Bank Nifty broader, it's moving to the range. But having said that, individual sectors, stocks in the sector performing well. IndusInd Bank is, of course, the pick for the day for me as well. It's got a beautiful change in polarity. So it's kind of, the news have coincided perfectly with the technical pattern emerging. It's change in polarity pattern on the daily charts, which makes it a very good buy as of today. Also, the weekly movement has been in good momentum on the upside, so that makes it a perfect fit on both the time frames. So I'd rather go for an IndusInd Bank from this banking space.
Right. Okay, that's the take coming in on banks right now. Today, of course, it's actually IndusInd and ET Now Impact. That's the one stock which is actually holding up, and perhaps the only one, because if you look at the rest of the banking pack, even the HDFC twins, much unlike yesterday, they aren't really unable to hold on, a whole lot. Yes, they're flat, relatively better than some of the other banking names, but not really doing any exceptional magic for sure. In fact, on the weak side, there's SBI. That stock is down about almost 1.5% right now. Big boys like Reliance are down about 1%. Maruti, wherein the street was extremely bullish on, it being Tata Motors and Maruti along with Bajaj Auto's time to perform. Maruti is surely not. L&T as well has been seeing some profit taking off late. That stock too lower by about almost 1% as we speak right now. We will take a very quick break on that note, but we'll continue spotting market trends and bring on board our fundamental expert as well on the other side. Okay, back for closing trades right here in ET Now. Still struggling actually in the red as we speak right now. In fact, the Nifty pretty much circling around the lowest point in the day, about 0.5% lower is where we're currently at. 100 points off for the Nifty futures as well, though so far it seems like we're going to have above 18,700 kind of close. Pharma, IndusInd Bank, to some degree Asian Paints and Bharti, these are your handful of gainers in today's trading session. Adani names have been quite a drag, even though the clarification has come in from the company spokesperson. 7.5% lower from Adani Enterprises. Adani Ports as well, down by about almost 5% on the futures. HDFC Life too has had a very choppy ride today, down about 2% as we speak right now. Tata Motors, SBI, Hero MotoCorp, these are also some of the other names which are dragging quite a fair bit. Naresh, just wanted your own take as well on the Adani names. I'm guessing you would steer clear, right?
Absolutely. So these are tough places to trade. And say after the last breakout, which happened about 2100, the spike to 2800 did not see any follow-up and it had been drifting lower. So now if somebody wants to take a trade, you need to wait for 2100 to 2050 levels to play a bounce back in Adani Enterprises. So the only trade again would be to look out for an Ambuja Cements coming down to 410, 420 zones. So that's a trade which I would be watching out for a bounce back, not looking at Adani Enterprises as such.
In fact, the clarification coming in from the Adani Group spokesperson very categorically says that they are not aware of any such subpoena to investors, saying that our various issuer groups remain confident that the disclosures are full and complete as disclosed in the relevant issuer offering circulars as well. So I haven't seen a material recovery, however, in the Adani group of names, although they've recovered definitely from the session lows. Some of the other beaten spaces, SBI definitely has been quite a drag, and then Reliance has really been unable to do anything. Meghna, what is your own sense on why this lag in Reliance and whether you foresee any material move?
See, as far as Reliance is concerned, I really don't foresee any such move coming in the near future. If you see the weekly charts of Reliance, I mean, there's been a consistent rise. In fact, it's made a higher top already. The bottoms are going higher. I can see a resistance. Technically, of course, it may not be easy for it to cross the mark above the level on RSI. Seems difficult, the kind of consolidation it's had, but rather I do not even see it going below the threshold mark. So I believe we are in for more of a consolidation, more of a time correction. That's what I feel going on for the coming few weeks in Reliance.
When it comes to Reliance, but Naresh, wanted your take regarding a couple of these names. Bharat Dynamics, which is taking a bit of a breakdown, and then the other one is Gillette, which is actually moving up. It's not a usual name that comes up, but suddenly spiking 5%.
So Bharat Dynamics has been a slow and steady uptrend. It gave a breakout and has moved up from 1000, 1100 to 1200 plus levels. And now going forward, 1100 is a short-term support. So overall, the trend is still positive. So not bearish here in a big way. It could get into a correction mode, sideways correction rather than a price correction. Gillette is something which I don't track. The stock has been in a downtrend for maybe the last 3 years now. So technically, just looks like a one-day move.
Move as far as Gillette is concerned, but let's talk about the long-term story now, and that long-term story is in India, in manufacturing. Indo-US relations have never been this strong, according to Prime Minister Modi and President Joe Biden. The leaders have batted for technology transfer deals, and semiconductor giant Micron Tech has signed a deal to set up a $2.75 billion facility in India. Ashwini Vaishnav, the IT and Telecom Minister, caught up with my colleague Sumit Chaturvedi. Listen into their conversation.
We are very hopeful that at least 2 or 3 other major semiconductor companies should be looking at India as their destination. See, we have to look at the semiconductor industry from its total perspective. The industry, which is globally today at about $650 billion, is going to grow to $1 trillion in the coming 6-7 years. That's the growth which is happening in the semiconductor industry. Second, talent which will be required. Almost 1 million more talent required in semiconductor industry. Third, the cost structure. Fourth, complete comprehensive ecosystem development. All the big 4 factors, the growth, the availability of talent, the focus on developing the entire ecosystem, and the cost structure. All the 4 points give us very important advantage to India. So we are very well placed. Then the demand, local demand, domestic demand, that is growing significantly, because the electronics industry, which was practically negligible 10 years ago, is today it has crossed $100 billion landmark production, right? Our mobile manufacturing units have become mature now. We have become a very big exporter. Close to $10 billion exports happened in the last financial year. So all these factors today place India in a very big advantageous position. That is what will propel the industry in a very big way. India has been one of those great inventing companies, one of those companies which changes the entire paradigm in automobile industry. Their focus on EV, their innovation, those things are really valued all over the world. So I'm so happy that Mr. Musk has decided to visit India and make sure that they can develop their supply chain also in India. So this will be a very important milestone, and this visit and the meeting between Mr. Musk and Prime Minister Modi ji, that will set the roadmap for developing Tesla's EV industry in India.
Okay, let's take the market conversation forward, and we have with us Pramod Guppy, the founder at Marcellus Investment Managers, joining in on the show right now. Pramod, hi, afternoon. Welcome to ET Now. Pramod, there's quite a divided opinion out there. A large part of the market participants do believe that this is not it. It's not just about life highs, but we're going to see newer highs from even the current juncture. And then some are getting a little edgy about the market valuations, and they believe that in the near term, this is the best it's going to get, and it's getting a little toppish. How are you reading into the market mood right now?
Hi. Thanks for having me here. No, I mean, short-term movements in the markets are always unpredictable, given that you tend to be driven by multiple factors not within anybody's control. Right now, clearly, the market is in the grips of FIIs buying into it. So for you to extrapolate that, you'll have to make a call on whether foreigners will continue buying or not. From the looks of it, there is a case for FIs to buy, particularly starting with the fact that interest rates seem to have peaked out, or at least are closer to the peak than any other time. To that extent, money tends to flow from the developed markets to emerging markets, particularly to risk assets like emerging market equities. And if that's likely to hold true, that should continue to mean that foreigners will continue to buy. And secondly, I think given the geopolitical situation globally, India clearly is set to get a larger than normal share of its flows coming into emerging market equities. And that means that we will see this sort of momentum. I think they've bought in about $8 billion compared to the $30-odd billion they sold between October 21 and March 23. So they'll likely come back much more strongly over the coming months. To that extent, it is quite possible. It is quite possible that we will overreach in terms of valuations. But the market never goes up in a straight line. It always exceeds on either side of the equilibrium. But having said that, I think if you take a relatively long-term view, there should be enough support in terms of earnings growth coming through. There are several drivers for it, starting with the banking system, ready to provide credit support to the industry. We're finally seeing an investment cycle in the country with private capex picking up. To that extent, you will see knock-on effects, both in terms of earnings from the industrial sectors, which haven't participated for the better part of the last decade. And that will have its own knock-on effects in terms of job creation, income generation, which eventually will benefit consumption as well. So from a domestic economy perspective, I think there's plenty to look forward to in terms of earning support, which should mean that these flows can be digested, provided you take a relatively long-term view.
Fair enough, but then this capex theme, the private capex theme, how are you playing that at Marcellus? Which are the stocks or sectors that is a buy at this point of time?
Well, at this stage, we're playing it largely through financials. In any case, we are a bottom-up house. We prefer to buy best quality stocks. If it fits into a macro theme, well and good, but otherwise we don't necessarily play a theme for the sake of it if we can't find good companies within that. And when we say good companies, we'd like to see good governance, good capital allocation, and some sort of a sustainable competitive advantage. We are working on it. We are looking at sectors such as electronic manufacturing services, defense, specialty chemicals has always been part of the China Plus One story. So these are some of the sectors which are likely to get some of the benefits of the rearranging of the global supply chain. To that extent, obviously, we're looking for opportunities there, but we will take a position only if we believe, from a bottom-up perspective, the specific company in question meets those criteria.
Within financials itself, how are you playing that? Are you sticking with the large caps, the likes of HDFC Bank, etc., which has been a favorite at Marcellus, or is it getting a lot more diverse and there are newer names that are also forming part of your portfolio now?
Well, we do have a dedicated financials fund. To that extent, beyond our flagship fund, where we own HDFC Bank, Kotak Bank, and Bajaj Finance, we do have some NBFCs in the financial specific fund. To that extent, we are exposed to some of the cyclical uptrends that we've already seen in terms of the credit cycle picking up. But we've always stuck to lenders who have a very strong liability franchise, because mind you, in an upcycle, it's very easy to grow your loan book. But unless and until you have some sort of an advantage on the liability side, which keeps your cost of funds very competitive, you can grow your loan book without taking undue risk, which will come back to haunt you if you haven't taken care of that at the fag end of the cycle. Because eventually, every cycle will have to see an end to it. At the end of it, you will have some assets, some NPAs coming through. So for us, more than your ability to lend, it's your ability to keep cost of funds under check, which is more important, which is where HDFC Bank takes the book. You've seen deposit growth growing almost double the rate of the system, even at the scale that HDFC Bank is. Part of it is, of course, necessitated by the fact that they have to replace liabilities of HDFC Limited, with which they're going to complete the acquisition later this month. But in general, it demonstrates the strength of the liability franchise, and that remains the number one focus for us while selecting lenders.
Right.
Okay, Pramod, point taken. But just before we head into the break, I had a quick question about HDFC Life, because that's also part of your portfolio. And we were just speaking with Vibha in the morning. She sounded quite confident that despite the tax changes, there's a long runway of growth available. Is that your view as well? And why only HDFC Life?
No, absolutely. I would to agree. Life insurance penetration is pretty low in this country. Mostly life insurance has catered to the savings side of the industry. We haven't really tapped very well into the protection side nor the annuity side. I think the tax arbitrages are a thing of the past. With that gone, you have a one-off impact, which is all the more reason why we choose an insurer like HDFC Life, because historically it has depended less so on such savings products compared to the rest of the industry. Particularly very little exposure to ULIPs, but has invested in developing a brand which is very, very important when it comes to pure term insurance or annuity products, because your savers or your insurance customers are taking a bet on your ability to furnish the claim when it's due, or your ability to service the annuities when you retire and need that capital most. So the brand is strong. The distribution has been fairly impeccable, particularly having a direct distribution arm. And finally, in terms of product innovation, HDFC Life has led the way. And also in terms of use of technology to create leverage in the business. So we're quite positive, and we do agree that the growth runway for life insurance is pretty long in India. And within that, we find HDFC Life ticking most of the boxes.
Okay, Pramod, just hang in there. Lots more to talk about, and we are also going to play out Vibha Padalkar from HDFC Life soundbite on the margins, guidance, where they see growth coming in from. But I would just like to thank as well our chartists for joining in on the show right now. Meghna, thanks a lot for taking the time out. We'll see you again soon. We'll take a very quick break, come right back. We'll continue our chat with Pramod Guppi and, of course, bring in a whole host of other experts as well.
Yes, there will always be pressures on margins, but we have to eke efficiencies out of our existing business and our back book to be able to fund some of that. If the tax change had not happened, the margins would have gone up. No question about it. Given that the tax change has happened and it is taking a little bit more time, while HDFC Life has fared in the first 2 months 2x or 3x, depending on versus private sector or overall industry. We have fared on every metric, whether it is in terms of new business growth, whether it's in terms of group growth, or whether it's in terms of number of policies or even protection. We have done well versus sector. However, it is lower than the typical run rate. However, we are carrying the costs of a full-fledged run rate of typically maybe 17-18%. So against that, we are trending as of now at, like I've guided, somewhere around mid-teens. So naturally, there will be pressure on margins only because of the removal of taxation. But if you take a slightly longer term view over the next year or so, once this year is out of the way, the upward trajectory on margins will continue to happen.
Back with closing trades right here in ET now, and just want to mark what's happening across the globe, because that's also where you're seeing a bit of a steep fall. If you take a look at what the DAX is up to currently, that's down about 100 points, a little soft for FTSE. CAC as well as FTSE MIB are all trailing in the red as we speak. But I think the good news is on the flashes on your screen, it seems that monsoon will cover more parts of Chhattisgarh in about 2 days, and we're waiting for the onset, and may cover more of Maharashtra as well. I don't know where in Maharashtra it's been raining. All we've seen is just very sporadic showers here or there. And yes, Karnataka in the next 3 to 4 days. But anyway, the good news is that they're almost there. So that should cheer up the markets, if nothing else. We'll have Dipan Mehta as well join in on the show in just seconds from now. I can see Jay Bala as well waiting by. But Pramod, just in continuation with what we were discussing earlier before I let you go, just wanted to understand if there are any other ideas which you are at least observing or keeping on your table for whenever the market gives you the right opportunity.
Oh, there are always ideas. Like I said, we are more bottom up. We take a long time to research on an idea and wait for the price to come. So we have a wish list, a shopping list there, where we've done research and waiting for it. But these are not specific to any theme, because like I said, if the theme works, it's a bonus, but it's not like we identify the theme first and then go hunting for ideas. But we do have quite a few where we're waiting for the right valuations to emerge.
any niche consumption plays over there? Because what one is seeing is that it's the luxury market which has been booming, and some of the newer discoveries as well, there within, both in the mid and the small cap arena as well, continue happening.
Yes, I mean they're all across sectors, but our luxury play has always been Titan for a long time now, and that's continued to be one of the core positions in our flagship portfolio. We do believe there is a very long growth runway in terms of market share consolidation within the jewelry space, and Titan is clearly leading that consolidation. There's a large unorganized market out there. The average Indian is migrating towards branded, trusted names. Given the urbanization themes and all, and Titan or Tanishq in particular should be a winner from a long-term perspective.
Titan should be a winner in the long term. Thank you so much, Pramod, for joining us with all that take on the markets. But let's welcome on board Jay Bala as well as Dipan Mehta, as we pointed out earlier as well. Jay, let me begin with you. It seems like a bit of a consolidation. That all-time high level has been elusive. What are the levels that you're watching for the Nifty and the Bank Nifty?
Thanks for having me, Anisha. The Nifty and the Bank Nifty are trending higher, make no doubt of it. But it's a very weak uptrend. It can reverse at any point of time. But as long as critical supports are held, you want to be, with the move in the market. And the critical support for Nifty comes in about 18,555 to 18,462. As long as we see the Nifty holding above those levels, assume the markets are higher. The critical level obviously is 1887. The markets missed that by 1 point. And if the markets were to take out that, the next resistance comes about 19,300. But be on the edge. Don't let your guard down.
Okay, don't let your guard down. That's the take coming in as far as the market is concerned. But let me bring on board Dipan as well and talk to him as well. Dipan, we were just speaking a couple of days ago, right? And we were talking about how weather could be a bit of a spoil sport as well. Given that, would you perhaps take the profits off from even the cement names? Because a lot of brokerages are also turning cautious. It's not the best time. Monsoons, as it is a lean period. And even the raw material tailwind seems to be ending for cement names.
Good afternoon and thank you for having me on your show. See, my view on cement has been very clear. We'd like to be underweight to nil weight in cement. And it's not just because of seasonal effect, but I think the way the capacity buildup is taking place over there, you may have a situation and intense price wars, which may impact operating profit margins. And if you compare what the challenges which are there in the cement industry and look at the valuations of the cement companies where they are trading at, look at their return on capital employed, and some of the other financial parameters, I can only conclude that we should be underweight cement per se. And the seasonal effect is just maybe an excuse to book profits. But by and large, I think you're better off buying the cement consumers, the real estate companies, engineering construction companies. I think they have far better dynamics and better prospects than cement companies per se.
So that's a take coming in as far as some of the cement names are concerned. But Jay, wanted to come back to you and discuss within the banking pack and within financials, is there any stock pattern that you like, any chart that looks very interesting to you?
See, SBI has actually broken down. It shouldn't have traded below 563, and it has traded below it. And it was pretty obvious to me that the move from the March lows was only a corrective move. And the market's movement below 563 confirms that. And the SBI is probably going to go below 500. And so that's an important breakdown for me from the banking space. And if you keep a track on Nifty PSU index, which is the PSU banking sector index, if it goes below 38.99, you're going to see an acceleration. And the index is composed of 55% SBI. So even the signals are coming from there. And Bank of Baroda, that's also put in a topping formation. So, take profits over there too.
Okay, so that's about the banking majors. But what about pharma? Do you think pharma has seen a bit of a consolidation and now an uptrend is likely? And if yes, specifically what names?
Is that for me, Anisha?
Yes, for you, Jay.
Okay. Pharma has seen a good rally, and the recent move off the lows from March, it's an interesting setup. It has potential to gather steam and go ahead. But in the short term, we are likely to see some pullback, probably somewhere close to 12,600 on the Nifty Pharma Index. The interesting stocks around there is probably Dr. Lal Path, and we need to see if it holds the recent pullback or recent lows of, the highs that it registered in May. We want that to hold up, and if it does hold up, it's going to get quite bullish, and we can see a sizable rally come over there. But it is essential that we see a pullback, and the Nifty Pharma Index holds about 12,600. If it does manage that, we're going to get quite bullish on the pharma sector, and a little bit of wait and watch in the short term.
Right. Dipan, the joke in the market has been that, you've got to keep one eye on the clouds, on the rain gods, and the other one on the block deal windows, because that's where all the action is happening out there. I just wanted to understand, what is it you're making of, this behavioral pattern or, this trend, if you may call it, about these block deals that are happening on a daily basis?
Well, I think it's great news that these block deals are happening, and I'm not too perturbed about exits which are taking place, because clearly I think the stock is going into stronger hands for one. And secondly, I think it is demonstrating to all the global investors that India has the depth and the breadth to absorb any selling pressure. And I think that's a very important aspect from an investor's perspective, that if they can exit a market, they can exit a stock at one shot at or around the market prices, that gives them more confidence to invest more money going into future, because end of the day, these institutional investors need to book profits from time to time. So I think that if they get an exit opportunity so easily, then it certainly is one more box which is checked when they are looking at investing in India. And also, I think all the sales which are taking place, eventually they come back into India as well. I'm hopeful of that. So that, it just kind of deepens the market and makes the market more mature, increases the number of players which are operating over here, and all of this is quite positive.
So that's the take coming in, not too perturbed by the block deals getting absorbed quite easily. But Naresh, your sense as far as this, the chart pattern of ICICI Securities is concerned, that's high by 7%, and even Angel Broking seeing quite a bit of momentum today.
So interesting price patterns on both. So ICICI Securities is coming back to the resistance of 570, which it made last November. So if it can sustain 570, that would be a trend change for the stock. Good recovery from the lows. But I would be more interested in Angel One, because that's the one stock which has made almost same bottoms around that 1050 mark over the last 2 years, and is now trying to make a breakout move of the last 1.5 years. So if it can sustain 1600 levels, the next view could be towards 1800, 1900. So that would be a buy with the stop loss at 1550.
Let's get you some buzz across the dealing rooms as well. In the morning, we told you all about HCC and the sizable block deals that happened there yesterday. And now it's select consumer durable stocks that are on the radar. Sharad is here to tell us why these names are propping up across dealing rooms.
Well, yes, in focus we are having Blue Star, and what we are gathering from dealers is that mutual fund houses are selling the stock. Apart from this, the key DI is actually holding the stake in the company. They include the likes of Axis Mutual Fund, SBI Mutual Fund, as well as Kotak Mutual Fund. Now together, the mutual fund houses roughly have 29% stake in the company, which is valued at roughly 3,600 crore rupees. And yesterday, even ICICI Securities came out with this report where they are maintaining hold in the stock with a target price set at 740 rupees. Now last year itself the stock is up more than 60% also, so the stock has also run up. But there are certain industry triggers which are actually impacting, especially the room AC segment and the industry. At the start of the season, the RAC industry was expected to grow at 20%, but now this is coming down to a degrowth of 20%. That's one of the main triggers. That's why consumer durable stocks are in the red today. Apart from this, the North Indian market also was impacted because of the unseasonal rains which was there. And also do remember that due to the intense competition in this space, the companies hadn't taken the price hikes as well. Today, even Voltas was in focus, with the UBS coming with a downgrade to neutral from their buy rating, and they slashed the target price from 1200 rupees to almost 840 rupees per share.
Dipan, what's your take on consumer durables? This erratic weather pattern is playing spoilsport, because we started off the quarter thinking it's going to be a bumper summer, 20% growth, but the latest management takeaways coming in from Amber also suggested that the industry might see a bit of a decline of almost 10 to 20% as well. What are you doing, if at all, in the consumer durable space? Would you take this dip as a buying opportunity?
I think I would, and I'm sure that these are cycles which I have seen in the past also play out. And when the actual sales pick up, maybe the next summer or before that, is very difficult to call. But the underlying long-term secular growth story remains intact for appliance companies, especially air conditioners. Air conditioning and cooling products are now absolutely part and parcel of our lives. They're no longer a luxury. There was a time when AC was a luxury, it no longer is a luxury. So you may have these dips coming in depending upon the weather patterns. But if you look at 3, 5 year type of projections, air conditioning industry should be able to grow at double-digit growth rates. And I think that any steep decline could be a good opportunity, but you need to have that contrarian mindset as well. But on the longer term, I'm pretty positive of the appliance industry. Look at the way the real estate retail is growing and number of new home sales are taking place. That certainly is going to drive the long-term growth rates for air conditioning products.
Right. Okay, before we begin winding up for the day and the week, let me also get in some BTST ideas, if any. Nuresh, what's on your radar?
So that would be a buy on Bharti Airtel. The stock has come very close to the previous highs. Stop loss at 853 and a target price of 875. Buy on NTPC, which is again close to an all-time high. Stop loss at 185 and a target price of 194.
Right. Jay, any stock recommendations from you? Anything that's looking tradable in the very near term?
Yeah, sure. I have a buy set up for the positional trader on WOCAD, like we discussed just before. Pharma is looking pretty interesting. And OCAD has come to the COVID lows and it's turning around once again from there. So a stop below 200 and a price objective of 280 on it. From an extreme short-term perspective, BTST, I have a STBT on Voltas. The price is somewhere close to 730 to 725, and the stop above 767 is essential. And I have a long on Bharti. Bharti is looking pretty interesting, and it's looking like it might touch fresh record highs. Stop close to 840, slightly below 840, and price objective of record highs close to 880.
Buy on Bharti, a sell coming in on Voltas. That's a recommendation coming in from JJ. But what about the IT index? Do you think it's paid its due, has corrected and seen that time correction already, or is there more on cards?
Yeah, IT index unfortunately is not getting any support from the frontline names. TCS, Infosys, Wipro, all looking weak, and Wipro and Infosys in particular, they look like they might take out the pre-Infosys, or the post-Infosys lows that it registered in April. So look, the setup in both of them look like that. But the strength is there in the mid-cap names, but my worry is that might also come off. So watch 27,700 on the Nifty IT index. If that were to give way, it could the weakness could percolate into the mid-cap names too. As it is, the heavyweights aren't helping, and within the heavyweights, the strongest is HCL Tech on a relative strength basis. HCL Tech ranks higher than TCS, Infosys, and Wipro.
Okay, that's the take coming in on IT. Deepan wanted to understand, what do you make of IT and whether it's paid its due course and has seen the slam dunk already happen? And I asked this in the backdrop of Accenture's numbers, which we had last evening. Is it time to now start nibbling into IT?
See, I think all depends upon stock selection in IT. You cannot brush all the companies paint all the companies with the same brush. And there are large companies like TCS, Infosys, Wipro, HCL Tech, Tech Mahindra, where the base effect certainly is going to impact growth rates. But there are smaller, nimble players like Persistent, Coforge, KPIT, Tata Elxsi. I think where the growth rates will be sustained in that mid-teens levels. And those, I think, are enough to keep investors interested within those stocks and the sector as a whole. See, IT is such a longer-term secular growth, so you can never really avoid it or be completely having a nil position in your portfolio. As and when I think the global macro headwinds subside, you will see again IT spending come back pretty strongly. This AI and Chat GPT and some of the other newer applications is going to drive revenue growth for the sector as a whole. So longer term, I'm positive. short to medium term negative on large cap IT, but I'm remaining invested in some of the mid cap IT stocks, preparing that there could be a few disappointments on a quarterly basis, but the longer term fundamentals are pretty much intact.
Fundamentals are pretty intact. Before we thank you, gentlemen, let me ask the $1 million question. We've been waiting for that all-time high level, but is it going to come next week? Jay, what's your sense? Are we likely to see the record high level on Nifty in the coming week?
Yeah, you nailed it. It's a $1 million question. I mean, first I thought it would not even cross 18,400, but it's crossed that, and it's come very close to the record highs. But even the thing is, even if it had to cross record highs, the main thing is what happens post that. But I believe this market doesn't have an expansionary bullish phase. Probably a fleeting bull market that can last between a few weeks to a couple of months. And if the level of 18,464 were given, I think the record highs are not coming straight away.
Naresh, I know you thought yesterday when we were shy of just 2 points away from that all-time high on the Nifty, but next week, yes or no?
So till the time we hold 18,600, I'll keep my options open for a new high. Once that breaks, maybe then we get into a period of much more deeper correction. So for now, till the time we hold 18,600, it could be next week or maybe a week after that.
This hide and seek, and it's been testing our patience for sure. The Sensex made it, the Nifty still hasn't. Next week, yes or no? Bipan?
Oh, sorry, this question is to me. Is it? Of course, I'm an eternal optimist. And of course, the Nifty will cross new highs next week. That's all I can say. But that's not important. I think client portfolios, investor portfolios are doing very well. And everybody who's got a SIP going or has invested in the equity markets, they would be pleased with the returns that they have got. And certainly their patience has paid off. And that conviction will lead them to invest even higher amounts of and give a higher proportion of their savings into equities. So very positive with this market breadth, I think, because the way small mid-cap stocks have rallied, that's where all the wealth is getting created for the smaller investors. So it's just a matter of time before the Nifty scales to a new high. And it's not just piercing the earlier highs. I think it should go at least 5-10% higher from these levels or so over the next maybe 12-24 months or so.
Thank you, gentlemen, for joining us. We're just wrapping up for the week, and it's not been a great one because we've managed to snap the 4-week gaining streak. The Nifty has ended in the red for the week, 0.8% down, and most of that is coming today itself, where the Nifty is going home with a cut of around 0.6%. The advance decline ratio turned unfavorable. There were a lot of stocks declining versus advancing today. The only pack that stood out in the trading session today was pharma stocks. So Dr. Reddy's, Natco Pharma, Aurobindo Pharma, these were your top gainers as far as the markets go. But for the week, it was the entire mid-cap as well as the small-cap universe that you need to take a look at, because the Nifty mid-cap snapped the 12-week gaining streak and ended in the red, and Nifty small-cap as well has managed to break the 12-week gaining streak. Nifty Metals was on the back foot, FMCG index was down in the trading session, and Nifty Bank too managed to decline. So the only gainer was IT, or even, okay, by the end of the trading session, IT also has completely flattened out. So those were the stocks that were in focus for the week and for the day. And that's how we are wrapping up the markets as well. Those life high levels continue to elude. We are still quite far away, almost a 200-point gap coming in from that all-time high level. Maybe it'll happen next week.